Forecasted that the Europe continent could be in for a mild winter did not allow oil to stay firm at the level of $95 per barrel, while investors believe that energy demand will be significantly lower and Europe will be able to avoid the worst-case scenario. Oil prices will gradually go down. In addition, oil prices are coming under pressure from the prospect of a weaker energy demand in the face of a global recession risks. Thus, OPEC has cut its forecast for global oil demand growth in 2022 and 2023, citing mounting economic challenges including high inflation, rising interest rates, and supply chain disruptions. Given the pace of the downward move, there is a likelihood that oil will dip even below $90 per barrel, even though for a while. Then the quote is expected to see a slight pullback and stabilize. The volume of short positions will increase after the price fixes below the 92 mark on the 4-hour chart. Otherwise, the quote may stage another rebound, similar to that seen last week. The yellow metal remains stable. This comes as a no surprise, as investors are awaiting statistics on UK inflation. This data is expected to make the market even more convinced that the Bank of England will stick to its aggressive rate hike path. Coupled with the measures taken by the European Central Bank and the US Federal Reserve, this will lead to higher demand for government bonds and the capital outflows from the gold market. So, gold is likely to start moving down to $1,700 per ounce in the middle of the week. In the meantime, market sentiment remains bullish, which allows the quote to hold steady at the high of the ascending cycle. That's why a technical overbought signal may well be ignored by traders. The mark of 1,800 is seen as the key resistance level. As for the Russian currency, it has been increasingly trying to gain value lately through such attempts occur in after-hours trading. Yesterday, the dollar fell below 60 rubles again. Apparently, this is the way the ruble reacts to the apparent reluctance of the largest Asian countries to join sanctions targeting Russia. During the upcoming G20 summit, the United States and Europe intend not only to condemn Russia, but also introduce a price cap on Russian energy. However, China, India, as well as other summit participants, representing the world's largest economies, are skeptical about the feasibility and effectiveness of this initiative. All this has a positive impact on the Russian currency, thus the summit's final outcome may well drive the dollar back below 60 rubles. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.